is the housing market in Kent set to plummet, or are predictions of possible housing market crash just unfounded doom-mongering? Well, according to some property tracking websites such as Property Snake, asking prices on some houses in Kent have dropped by as much as 30% over the last 6 months. In a moment, we'll be speaking to the housing market expert who's predicting a 10% fall this year. But first, our Radio Car reporter Bob Dale is in North Kent, where there's a house up for sale. Morning, Bob.
Yes, good morning, John. I'm here in Greenhithe at a new development, Ingress Park. I'm at the home of Michael Turbeville, whose house has been on the market for 7 months so far, but so far remains unsold. Michael, good morning.
Good morning.
First of all, how many offers have you had for the property in the last 7 months?
Well, in 7 months I've had approximately 10 people view the property, and I've had about 3 offers well below my reasonable accepting price.
So how much have they taken off the price that you've been offering?
A good 15% or 20% below what I've dropped to, and I've dropped about 30% in the past 7 months.
Are you in a position of having to sell at the moment? Are you in a position of having to look at some of those offers even though they are so low?
Well, I'm not in a position where I'm desperate to sell. It would be convenient for me to move because of work, because it's just inconvenient to travel 50 miles each way each day. But it's just, it would be nice if it would sell, so I'm not pushed as some other people are who can't move their house at the moment.
Yes, what is the position with any of your neighbours you might know have their properties up for sale?
Well, I have a friend whose job has transferred them to Torquay, and they start next month, and they've had their house on the market for 3.5 months, and they've had 3 people view and no offers. And, they are going to be renting a place in Torquay and leaving theirs empty here until it does sell.
Some might say prices boomed so much, people are now maybe asking unrealistic prices for properties that would not have been worth that a few years ago. Do you think you may be being unrealistic with the amount you're asking for?
Oh, completely wrong. I think the prices are, at the moment, below what is a realistic price, and everything is really a good value for money for anyone who is buying with the money. It's just, well, interest rates are a bit high, it's not public confidence, and people are just not willing to, stretch that little bit because they're like, oh, well, I'll wait a little bit because it'll come down a bit more in a few months' time.
So you think people are waiting because of all the reports that there is going to be a property price crash, prices are going to fall?
Definitely.
Who do you blame for the situation? Clearly you think there is a problem with the property market.
Bank of England.
And why do you blame them?
Well, they could drop interest rates for the general public, but they're not interested in dropping interest rates. They're only looking after business, and as long as business is doing fine and interbank loans are doing fine, they're not going to change anything. They're not interested in what the general public is, having to suffer.
So, realistically, are you going to put up with the commute until you get an offer close to what you want, or will you at some point say, OK, that's it, cut my losses, I'm going to take the best offer I can get?
At the moment, I've dropped my price to the lowest price that I'm willing to accept, so it'll sit there until it sells. If it takes another 6 months or a year or 2 years.
Michael, thank you very much indeed. As you can hear, John, definitely one homeowner with his property on the market not happy with the way things are.
Thank you, Bob. Well, listening to that is Jonathan Davis, chartered financial planner and also a spokesperson for the company www.housepricecrash.co.uk. Jonathan, did housepricecrash.uk continue? Was it up and running when house prices were booming?
Yes. The website was established in late 2003 to collate information about economics surrounding the housing market. And last summer we actually put a forecast as to what we thought was going to happen to house prices. And at that point we said that house prices would fall 30 to 40% over the 4 to 6 year period starting last summer.
Do you still stand by that, do you think?
Absolutely.
And is that across the country or
Yes.
some area? So it doesn't matter, there's no protected areas here?
Why would there be any protected areas? In the last 10 to 15 years, every single area in the country has risen 200 to 300%. So why should any area be protected from the fall?
But what if the Bank of England cuts interest rates next month, which many people predict they will? Won't that stop that fall?
No, because whatever the Bank of England does doesn't directly affect mortgage rates. Your interviewee there talked about a technical thing called the interbank lending. mortgage rates really come from the interest that banks themselves pay for their borrowing, and they then pass that on in the form of mortgage rates. Now, that is not directly related to what the Bank of England does. So I'm afraid your interviewee was wrong when he said that the Bank of England is to blame for the housing situation. It's not the Bank of England, and in any case, the Bank of England is not there to manage house prices.
No.
The Bank of England's sole raison d'etre is to manage inflation, and inflation, as most people know, is rocketing.
Okay, so they might, but let's say then, if mortgage rates come down, let's not talk about the Bank of England then, if mortgage rates come down, would that stop the fall?
If mortgage rates come down, it would reduce the rate that prices fall. It will not stop the fall. The fall is inevitable. Any market, whether it's shares or gold or property, which has gone up 200+% in 10 years, is naturally going to fall back 30 to 40% over a few years.
Okay, we're talking about in this way, in a sort of a doom and gloom way, but surely this might be good news for many people listening to this. People who are trying to get on the housing ladder for the first time might be very pleased to hear this news.
Look, I'm an investment advisor, and I personally don't care whether prices go up or down. I represent House Price Crash Co UK because I think prices will go down. Whenever investment markets change, there are always winners and losers. The winners clearly will be people who are not in the market right now and would like to buy at lower prices, or indeed those who perhaps are in smaller properties than ideally they'd want to be living in, so they'll be able to trade up more easily, more cheaply in a few years' time.
So the $65,000 question, if you were thinking of entering the property market, would you do it now or would you wait?
Oh, and my clients aren't touching property with a barge pole. I would wait at least 2 years. 2 years?
Right.
A market like property does not go up for 10 or 15 years and then suddenly move for only 6 months. It will be a 4 or 5 year decline. I would certainly wait for at least 2 years, and even then, I would only watch what was happening in the market then and probably put in a very low offer at that point. I myself probably wouldn't want to re-enter this market for 3 or 4 years.
Jonathan, thank you very much indeed. Jonathan Davies, Chartered Financial Planner and spokesperson for the company www.housepricecrash.co.uk. And a piece in the paper today in the Daily Mail about house prices. Owners of detached houses are the biggest losers in the weakening property market, official figures revealed yesterday. They saw an average of £8,394 wiped off the value of their homes in 4 weeks late last year. This works out at £270 a day. So different houses seem to be affected in different ways. But the thing to remember, I suppose, if you are in the housing market, if you own a house and you are thinking of moving, of course, the house you will buy will also be coming down in value. Particularly if you're trading up, it might be coming down more in value than the one you're in. So actually, you might end up with quite a good deal. And the only people it really affects when property prices go down is, one, if you end up with negative equity, or, of course, if you end up in a situation where you're wanting to sell your house to release the capital and not buy another place. Then it affects you.